Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully all of you had a good day today. And in today's markets, guys, well, it was a record-setting day, but not in the direction that many had hoped. Unfortunately, one of the worst day on record for a lot of stocks in the AI and infrastructure build-out plays, the worst day since either the Black Monday sell-off of August the 5th, or you would have to go back all the way to 2020 to find losses such as these. VRT, 30%. Arista Networks, 22%, Broadcom, 17%, NVIDIA, 17%, Oracle, 14%, TSM, 13%, and the list simply goes on. A lot of the infrastructure plays for AI, or even the AI companies themselves, getting absolutely washed today. Of course, and that has to do with, no, not the Trump 50% tariffs on Colombia, and not even from the Bank of Japan raising rates on the Friday session, but from DeepSeek, the Chinese AI company that has benchmarked very well against the open AI software as a whole. So in today's video, guys, we obviously have to address the elephant in the room. What exactly happened today? What is going to be the recourse? And how do we still feel about the US AI tech trade from companies anywhere from ranging from NVIDIA all the way to other big tech names such as Microsoft, Google, Apple, Amazon, and all the other traditional ones. So in today's video, guys, we have a lot to talk about for sure. Number one, we're going to be going over the DeepSeek news. It is not new news, by the way. They released that version of their chatbot last Tuesday and provided another update on the Friday session. So the markets have known about this, but they chose to react in a very violent way today after reviewing the data and benchmarking it further over the course of the weekend. So we will tackle that in point number one. Going to be a very interesting discussion, but moral of the story, guys, no, I don't think it's an NVIDIA killer. It made for great volatility in the markets today, which was a decent buying opportunity for some, but I do not think it's going to absolutely kill the AI trade, and we're going to get into the reasons as to why. Number two, we're going to be going over one company that had earnings today, and that is going to be SOFI. They had earnings before the bell this morning. We'll take a look at their numbers and see what's in store for the company over the next coming year. Thereafter, we'll go through, of course, our technical analysis rundown of our major market indexes, and you will see, although there was damage today, a lot of sectors were actually spared. It was not a broad market fear-driven sell-off, very highly concentrated sell-off into the affected sectors by the DeepSeek news. And after, of course, take a look at our big tech names and see how our big tech names are shaping up into one of the biggest weeks of earnings, arguably for the entire next portion of the quarter. So after that, guys, lastly, take a quick glimpse into my portfolio for a few trades made today, and you'll see there was some pretty juicy ones. I did spend a little bit of money. Been telling you guys I've been hoarding my buying power for the past 2 weeks in anticipation of these tech earnings, and I thought the volatility this week was going to come from Jerome Powell, because we haven't even talked about the fact that we have Jerome Powell this week on the Wednesday session. I thought the volatility was going to come from him and from big tech earnings, but this DeepSeek news is just the extra icing on the cake. So without further ado, guys, let's jump right into today's video, shall we? So moving into the SPY, down about 1.41% today. The Q's down about 2.91. However, some of the damage today is being reversed in the after hours. You'll see all these companies plummeted during regular market hours and recovering slightly in the after hour session. So we'll see how we open out through the morning tomorrow. But all in all, guys, take a look at the heat map. You will see very highly concentrated damage. A lot of the infrastructure build out providers such as Oracle, even Palantir, a pure play AI play, was down today. NVIDIA, Broadcom, and all semiconductors tumbling down. Very logical. We'll explain that when we take a look at DeepSeek. Google, Tesla down as well, but Meta, Apple, and Amazon actually holding their own. And some of the software as a service plays, some of the plays that stand to benefit from a reduction in costs of these large language models, they were benefiting tremendously from the day today. Financials largely unaffected, healthcare also largely unaffected, consumer defensives, Walmart, Costco, Procter & Gamble, they definitely don't use AI, so they were unaffected. And the bottom half of the market, for the most part, even industrials, energy, utilities, performing quite well, except for the segment in utilities, which pertains as to electricity power for those data centers. So it's really concentrated pain into either the direct infrastructure players, such as semiconductors, possibly even the hyperscalers, the ones that are possibly spending, quote unquote, too much money on their data centers, and the electricity build-out plays, as well as the small modular nuclear reactor plays, such as Oklo, SMR, stuff like that, all the AI narrative trades are now coming undone one after the other over the course of the day today. And there was a definite rotation from the AI plays into everything else in the market, essentially. So that is the one key thing about today's action, guys, that leads me to believe that it probably will not lead to a broad market sell-off. The one thing that could lead to a broad market sell-off is comments over the course of the week from Jerome Powell, and in the event that big tech earnings as a whole point to lower growth in 2025. That would be a bit worse, but we're not there yet. We'll tackle that if we ever come to it. But today, very healthy rotation from the hot, high-flying AI names, as the recent narrative has been in the last 2 years, to everything else. Take a look on the one-day relative. You'll see that even better, very mixed market. Of course, to the biggest weights to the downside, technology, utilities, industrial, and energy, and to the upside, defensives, healthcare, real estate, and financials holding their own. On the one-week relative, we remain fairly mixed as well. Healthcare, your biggest outperformer after lagging the markets, guys, for 3 months in a row. Healthcare finally showing up to play ball. To the downside, of course, technology, energy, and utilities. Technology was doing good, and that was, of course, before today. So that is the summary of the heat map, guys. And now let's get into the thing that everybody wants to see, which comically, I found this quite a very nice description of what happened today. A random team in China made great strides in AI, and now we are all poor because of it. So you kind of have to laugh at what happened today, guys. This is, it's obviously satire. But still, that is in essence what happened today. So if you don't know what happened today, we're going to talk about DeepSeek. And what indeed is DeepSeek? Well, DeepSeek is the company that everybody's been talking about. This is a software essentially that is modeled after ChatGPT 4.0. So essentially what China has done is they have replicated and copied the ChatGPT 4.0 modeling and then made it even more efficient. Made it slightly more advanced and for a fraction of the cost. Everybody is focusing on the fraction of a cost, and the fact that they are using GPUs that are the older versions of NVIDIA's models because they cannot, of course, attain the newer version of NVIDIA's GPUs because of the export restrictions. So they were able to do more with less, but they did not create this model from scratch. It has been modeled after several different LLMs already in the game, namely after ChatGPT 4.0. And China and the US have been doing this to each other for years, guys. Someone comes up with an innovation and the other country copies it and makes it for less of a cost. What that does is a positive return to you, the consumer of these services. That is what you call a healthy market and free market competition. DeepSeek as well today, after so much interest during the weekend, hit #1 in the Apple App Store for downloads. So quite a substantial stride from them. You have to give credit where credit is due, guys. Look at these benchmarks. DeepSeek is the blue column on the right. You will see that they're pretty much eclipsing not only the new version of ChatGPT 01, they're eclipsing 4.0, they're eclipsing Claude, and what's not on here is they're also more advanced than Google's Gemini laid out as well, and that is across many different applications. DeepSeek benchmarks very, very well against the competition, especially when you factor in that they're doing it for somewhat of a fraction of the cost on somewhat quote-unquote outdated technology, right? The total spend, now this is up for grabs, of course. They say that the entire model was built on a roughly $6 million budget, which is really a lot smaller than the roughly $300 billion that big tech has plowed in to their own data center applications. But trust me, big tech is not spending $250, $300, $500 billion, guys, on who can make the best chatbot. That is really a very small fraction of what the data centers will be used for, and we're going to get into that in just a few short moments. So you will see that DeepSeek is not a new technology. This post on Reddit was made a month ago, where DeepSeek version 3 benchmarks are, or were even at that point, standing up very good against the competition. Take a look at this graph right here. We can blow it up if you guys want. Benchmarking already very well in terms of DeepSeek V3. And even the V2 here in the light blue was benchmarking very good against the competition amongst a myriad of different applications. So DeepSeek is not a new technology. They did not just develop this. They have been working at this for years. Now, NVIDIA obviously was down tremendously today. And here's what they had to say. NVIDIA says DeepSeek advances prove need for more of its chips. Well, it stands to argue, guys, if they're able to do that on a reduced budget, imagine what they could do with the state-of-the-art chips. It would be a very good advancement for the world as a whole as we push the boundaries of this technology. But I will remind you guys, these are only large language models. This is a very tiny fraction of what the overall AI total addressable market can be in the distant future. So here's what NVIDIA had to say. The DeepSeek's works illustrate how new models can be created using that technique, the new technique DeepSeek is utilizing to cut down on power, cut down on costs, and put out very specific and high quality results. They are leveraging widely available models and compute that is fully export control compliant. So NVIDIA themselves saying that they are very pleased to see DeepSeek making the breakthroughs that they are and challenging the industry and trying to set the bar higher and higher for the industry as a whole. Moving on further, we also had commentary from Microsoft CEO Satya Nadella. He's saying the AI use will skyrocket with more efficiency amid the craze over DeepSeek. He did not say that today in response to declines in stock prices. He said that yesterday evening on the Sunday session. In an apparent response to the attention on a new AI model out of China, Microsoft CEO Satya Nadella posted online late Sunday to share an economics concept called Jevons paradox. Jevons paradox strikes again, said Nadella, linking to a Wikipedia page describing the phrase. As AI gets more efficient and accessible, we will see its use skyrocket, turning it into a commodity that we just can't get enough of. And as a matter of fact, guys, that is already what's been happening. You've seen since the advent of ChatGPT, when it took the markets by storm roughly 2 years ago at this point in time, everybody had to get their hands on it, and then other different people were making different versions of LLMs at the same time. Anthropic with their Claude model, Meta with their Llama 4 model right now, Google with their Gemini, everybody in the business developing their own large language models and neural networks, resulting in some very good chatbots that are very good at answering basic to advanced questions, whether that's from medicine to math to law and everything in between. It's giving complex answers to complex problems, something that's saving a lot of time for a lot of researchers and anybody in the information technology space. So Satya Nadella saying the exact same thing. And I will lead you guys into the final quote before I get into my opinion on the matter. Because DeepSeek was largely using technology that was made and created by the United States first, well, you can argue that they kind of copied them. But that is not a bad thing, guys. As one famous person said, Pablo Picasso, good artists copy and great artists steal. And that's what's been going forth between the United States and China. I'm not going to say China is the one stealing stuff every time. It is a mutually beneficial relationship. China develops new tech, and then we try to implement that here, right? You guys know China can build skyscrapers and bridges in a fraction of the time it takes us. Some of that is because of red tape. Some of that is because of labor laws. But China has invented several engineering techniques that shave a lot of time off of normal things. And it goes vice versa, guys, right? That is the goal, to where it is a free market competition. When somebody develops new technology, it wants to be copied, it wants to be stolen and applied at the home or at a country that does not have it, right? This is what makes the world progress forward, and progress is always a very good thing. So in terms of my opinion on DeepSeek, guys, I'm going to keep it very, very short right now because we've spent a decent amount of time on it already. And my opinion is as follows. I will give 4 single points for this. Now, number one, of course, well, in an introduction, a pretext, you have to give credit where credit is due. China is extremely good at making more efficient versions of existing products. You've seen that so far with either applications from engineering all the way to applications such as electronic devices and even cars. China largely 5-6 years ago did not really have a use for electronic vehicles and electric vehicles, and the ones that they did were fairly limited in their use cases. Now, China is able to build and scale EVs for under the cost to the client of $10,000. China is literally selling EVs to consumers for $10,000 or less. That is a fraction of the cost that we pay here in North America and a fraction of the cost that you pay anywhere around in the world as well. They've also done major advancements in smartphones and personal electronics. The new Huawei phones are absolutely fantastic. They can largely surpass any benchmarks from, rival firms like Samsung and Apple. And they have very good resolution on their screens, very good cameras, very good processing units, and all of that done with some form of limited technology because of the export bans. So China is very, very good, guys, at being extremely efficient with the tools that they have at their disposal. So that is nothing new. That has always been the case, and you have to give credit where credit is due. That is the preface. Now, my 4 points as to my opinion on, is this going to destroy big tech? Is it going to destroy NVIDIA? Probably not, guys. Let's be honest. It is a drop in the bucket and is a positive for the markets as a whole, as we've heard from NVIDIA and as we've heard from CEO from Microsoft, Satya Nadella. Now, number one, my point in terms of the opinion is the AI chatbots are now commoditized. This should be fairly obvious. It started with OpenAI. OpenAI was seen to have a huge competitive advantage, and as time has moved on, several things have caught up with it. DeepSeek has caught up with it. Claude from Anthropic has caught up with it. Llama 4 from Meta has caught up with it as well. Google Gemini has caught up with it as well. You can argue that certain points of Microsoft's AI have caught up with the band as well. And this will continue, guys, to where every single company in the world will have their own version of a very rudimentary or even complex at this point. I say rudimentary because in the grand scheme of where AI is going, chatbots are like step number 0.001, guys. The total addressable market goes way further than just a normal chatbot, and we have to remind ourselves of that. These chatbots are fun, they can have various implementations, but overall, guys, it's a very rudimentary form of what AI is going to be and mean for each and every one of us over the next 10, 15, 20 years. But now they are commoditized. Everybody has one, so it's a race to a cost of zero, which benefits several people, namely you, the consumer. This is going to prevent OpenAI from charging people $20 to $200 for monthly subscriptions. If everybody has them and everybody can benchmark at roughly the same levels, why would you pay $20 to $200 a month? You're going to go with the cheapest option that gives you equal performance. You do this every day, guys. When you shop for phones, for TVs, for anything, you just want the best bang for your buck. And that is what the commoditization of these chatbots and LLMs are going to do over the next 1 to 2 years. Everybody's going to have one, and everybody's going to forget why they are so popular in the first place. That's what happens when something becomes commoditized. It just becomes average. It is step 0.1 in the AI race. Number two, my second point as to why, as to the fact, as to my opinions on the matter today. Number two is that AI's final form, guys, is not only chatbots, right? That would be very, very underwhelming if the best thing that billions of dollars in data centers can do is make a little chatbot that can answer your questions. Yes, it's a good breakthrough in technology, guys, but let's be honest, they've been working on large language models now for at least the past 5 to 10 years, on and off with varying degrees of computing power. It is not new technology. It's very fun technology to use. However, it is not the end-all be-all of AI. Think of the military applications, which are extremely complex in the future. Think of quantum computing applications. You can definitely not scale quantum computing applications using a $5-6 million setup, such as the one that DeepSeek AI is using. For that, you need a lot more computing power, and you need a very advanced network. Number three, quantum physics applications. These quantum physics calculations require a lot of time, a lot of processing power, and these will be advanced over time. We're going to learn more and more about humanity, more and more about the universe as well. And to do that, you need very, very powerful computers. So you want to have the most computing power possible. Think of rocketry telemetry as well for either space missions or even military and ballistic applications too. Think medicine advancements such as DNA sequencing and genomics. That is going to be crazy, guys. If they can possibly cure through genetic modification and whatnot, if they can find cures to ailing diseases such as Parkinson's, Alzheimer's, cancer, AIDS, the possibilities are truly endless with DNA sequencing. That also requires a tremendous amount of compute power and requires state-of-the-art modeling, right? And other things like engineering and infrastructure buildouts, optimization of possible cities and stuff like that too, right? Sewer network, rail transportation networks, all of that combined, that is going to be the future of AI, right? Robotics networks as well, in terms of personal robots or commercial robots, all of that, guys, is the future of AI, not just the fun and quirky chatbots that we have today that are also very good at helping you out with your homework, mind you. Number three is going to be the cost. Then this is the big one, guys. If big tech is spending $500 billion, guys, on data centers for their own processing, well, it stands to argue, guys, that they're not going to spend $300 to $500 billion or more on only chatbots. No, big tech is spending this money to modernize and future-proof their own installations. Big tech arguably receives the most amount of data in the entire world. Consumer data, commercial data, enterprise data, and all that data needs to be processed somewhere, stored somewhere as well, and optimized. That is why they're spending that amount of money. They're not plowing $300 billion, guys, to spend $300 billion of GPUs and pushing it towards a chatbot. That is just not the case. They have their own data to collect. optimize and serve, and also take upon third-party requests from other individuals who also need their data processed. Think of it as a giant supercomputer with many, many, many different applications. They can use it in-house. The data processing power can be rented out as well. So the time horizon for these is going to better the efficiency and productivity of these companies and help them filter through all of this consumer data, enterprise data to derive trends over the next 5 to 10 years, guys. It is a future-proof investment that big tech is making, and I think it's one that they actually need. So the chatbot applications for the data centers, guys, is a fraction of the total compute power that they're actually using for their in-house data applications of managing all the incoming customer data, right? So it's a build out that's much needed for capacity over the next 5 to 10 years. And point number 4, I said it earlier, guys, this is very healthy for market competition. It always is. It is healthy for the end consumer because the prices of LLMs are simply going to be driven down, as Satya Nadella hinted at as well, and as NVIDIA hinted at as well, guys. They're going to be everywhere and people are going to want more and more and more of them. And what that helps, guys, is it helps the end consumer, which is you. So at the end of the day, maybe you're not happy because some of your investments went down today, but the end user, you, will win at the end of the day. The price of this AI technology will be implemented in everyday devices. And as per the free market, guys, when there's a lot of competition and a lot of supply and still high demand, the prices will start coming down over time. And that is a good thing for the overall market. So do I think that, in summary, DeepSeek is a NVIDIA killer, a Microsoft killer, an Apple killer, an Amazon killer? No, guys. Those guys have legacy business models that do not rely on their new advancements in chatbots. They have existing business models, for all intents and purposes, high levels of monopolies as well at what they do, and I do not think these companies are going anywhere soon. But one thing that it can cause, however, is a little bit of scrutiny as to big tech spending. And we are going to hear a lot about that scrutiny coming up over this earnings cycle, where I'm pretty sure, guys, Wednesday after the close, even before the close, ASML, Meta, Microsoft, Apple, Intel rather, and even next week, Google and Amazon, they're going to get absolutely grilled by analysts as to is the spending on data centers justified, and hopefully that management will answer in the way that they should be answering. I think they will, guys, in saying, listen, we're not spending all that money for chatbots. We're spending it for our own infrastructure and data collection and processing purposes. So we will see what they have to say about this come the the Wednesday and Thursday sessions. So that is my take on DeepSeek, guys. Hopefully you guys enjoyed that. Now, let's move into something more fun, shall we? Or maybe that was fun to begin with. Let's move into SOFI earnings. So SOFI coming in before the bell this morning and went down 10.27% after earnings, guys. However, the numbers, guys, were very good. Now, keep in mind, from the rally 13th of January, the stock was already up a whopping 34% leading into these earnings. So unless they were going to push the boundaries of guidance, suffice to say that a pullback was potentially warranted, right? The stock has ran an absolute ton since last quarter. If you measure since last quarter, the stock was up to the peak 80%. So they had some justification to do as to whether or not this move was justified, and I really believe it was. Now, obviously, it was kind of fighting the tide today with all the market being down, or most of the market being down. Very tough for SOFI to be up 10% when they missed slightly on guidance in terms of EPS projections. So let's move into the numbers, and I'll show you guys why I was actually quite happy with SOFI earnings today. Beat on EPS by a whopping 700%, but that's just because they're starting from zero, right? So the estimate was 0.03, coming in at 0.29 standardized, very nice, and a nice revenue beat by 10%. Arguably, in my opinion, the revenue beat is a lot more important than the profit beat. However, SOFI turning a very nice profit for the last 5 quarters. This was not always the case. SOFI has been an unprofitable company for the last 3 years. 2024 has just ended. And look, they have posted positive net profit margins of 13.2%. That is absolutely phenomenal. And what you want to see as a SOFI shareholder, the business turning more and more revenue, but also taking some of that revenue and driving it to the bottom line with cost optimizations. So now let's move into the SOFI earnings, and you'll see, guys, they're actually quite good. So the SOFI shares did drop 15% in the pre-market, and the 2025 outlook disappoints despite Q4 beat. I think disappoints is a bit of a strong term, and I'll explain why. Q1 and 2025 earnings guidance missed Wall Street estimates despite reporting a Q4 beat. For 2025, SOFI projects a GAAP EPS, so earnings per share, otherwise known as profit, the midpoint of 26 cents, which was below the analyst consensus of 29 cents. So they missed for the entire year for guidance by about 10% on EPS. it hurts a little bit, but look at this revenue expansion. Just adjusted revenue, net revenue expansion, 3.2 versus 3.275 versus the 3.05 billion expected. So beating on the revenue guidance by 7 to 8%. Arguably more important, you want to see SoFi getting more and more customers, and then they will be able to drive cost efficiencies and improve their EPS and net income over time. But I really like these revenue increases and guides here, guys. For Q1, the company forecasts GAAP EPS of 3 cents below the 6 cent estimate, so a little bit soft for Q1 guidance for EPS. But look at the revenue. Revenue estimate 725 versus 745, beating the 707 estimate. So a nice 5% beat on Q1 consensus. So very mixed guidance. Guiding for less EPS, but more revenue. So all in all, guys, not that bad. The CEO, Anthony Noto, highlighted SoFi's first full year of profitability with Q4 EPS of 29 cents rising from 5 in Q3. And the adjusted net revenue topping estimates, loan origination growth, 63% jump in personal loans, and 71% rise in student loans. But SoFi has been largely kind of trying to diversify its business from only being niched down to student loans, which is what they started off with just a few short years ago. And now they've been diversifying their business through various things that we'll look into right now. So here's a look at the investor presentation. We're not going to go through everything, just some of the highlights as to why I think it's a very good thing for the company and why you should be very happy with this report from SoFi overall. Now, the adjusted net revenue beats by about, or increases by 26% this year. Fantastic. Net income, as you can see, recorded GAAP net income of $499. We saw that was a 13% net margin increase. Very good. First full year of profitability and tangible book value growth to $4.89 billion. That is very good, guys. The market cap of SoFi right now sits at about $17 billion. So to have this, they're trading about a 3-to-1 price to book for a fast-growing tech company. That is not a terrible valuation. So they've done wonders in improving their fundamental valuation. Take a look at the business highlights here on the right-hand side. 34% growth in the members and 10x growth over the past 5 years. What more do you want? Fantastic growth numbers, right? Record loan originations and a whole new suite of products here. 14.7 million products offered. Now, obviously, they count one stock ticker in their stock brokerage platform. One ticker is one product, so you have to take this with a grain of salt, but they're adding more and more features as the year moves on. Very healthy growth overall by the company. Significant growth by the company, as a matter of fact. So let's move on to exactly what they do. They're now doing everything. Home loans, SoFi Money, SoFi Invest, credit cards, protection, loan platform businesses, personal loans, student loans, and home loans. So a whole host of financial services and a whole host of lending platforms. They really want to become the one-stop solution as a fintech player and challenge the legacy banks at their moats. Now, look at the members and products. Compound annual growth rate of 53%, 34% year over year to over 10 million members. Very, very, very strong member growth right there. New product additions, you can see that right here, 14.7 million right now. Business diversification. There's a diversification factor, right? Ratio of financial services to lending products is going up. So they're putting less and less emphasis on relying on loans overall. So that is very, very, very healthy overall. Look at these growth numbers in financial products, guys. 51% more money market, to 39% more relays, 19% more investing features for the platform, and 14% boost in credit cards. Also, some very nice growth in their loan segments. So they are diversifying not only financial services, but also their lending products as well. Very healthy report, guys. You'd be very hard pressed to pick apart anything from this report. It was actually very good. Here is their Galileo tech platform. This is a very big thing for SoFi. If you don't know what Galileo is, think of it as it is a platform that they acquired a few short years ago. And essentially what it is the back end. You see the UI here on the phone? So what they're doing is they know that legacy banks have very old and outdated either apps on their phone, web apps on their website, and just an overall kind of sluggish customer experience, right? If you've played with fintech applications versus that of legacy banks, you probably think the legacy banks are kind of a bit behind in technology. That is where Galileo from SoFi comes in. It is a contractual service. So SoFi, if you are a legacy bank, let's say you are Deutsche Bank from Germany, because this is a real case scenario. Deutsche Bank has chosen to modernize its web interface and its app interface as well. And who is doing the back end for that? It is SoFi's Galileo. So that is obviously a contract that they have with Deutsche Bank, which is recurring revenue every single year. It is a win-win situation. A win for SoFi, it puts more money in their pocket, but it's also a win for legacy banks because arguably they do not have the engineering teams required to modernize their own web applications or their own phone apps as well. So sometimes they do choose to outsource that with Galileo. Take a look at how many different people are using Galileo, but maybe they just don't know about it, because you would log into your Deutsche Bank app and it's not going to say Galileo, it'll still say Deutsche Bank. But total amount of people on a Galileo user interface is 168 million. So the amount of technology platform accounts using Galileo is steadily going up. And apparently people really do like the service. Great feedback from some of the legacy banks using that. Now take a look at the diversification, and we will end this here. Financial services and tech platform revenue. You will see that all adjusted other net revenue is mostly from their loans, but you can see financial services and the tech platform revenue, which is Galileo that we just talked about, you'll see that it's taking more and more of a portion of the pie. They are diversifying away from their only loan business, more in favor of the technology platform Galileo and financial services, credit cards, stocks, and everything in between, right? Now you can see the diversification happen even more. Financial services and tech platform percentage of adjusted net revenue. The blue box is taking more and more and more of the total revenue of the business. So the business just diversifying away, which is a very solid thing to do, guys. And that is pretty much your rundown for SoFi. They are well capitalized. I didn't show it to you guys, but they have a graph down here of them being well capitalized. Personal loan credit performance, all you need to know is we are under the historical norms of 2017. All you need to know from these charts, guys, is for this, these were the amount of unpaid loans, and we are under the average mean of the average unpaid loan. So yes, they have more customers, but are customers defaulting on their loans? No. As a matter of fact, at a ratio of about almost arguably half of what we had in 2017. So they're getting better clients right now, and not that many people are defaulting on their loans or holding excessive balances on short-term credit products either. So all in all, guys, a very solid report from SoFi. You'd be hard-pressed to pick any of this apart, truly. It's just a byproduct of the how much it's ran since last quarter and the overall market reaction to today's DeepSeek events, right, which was carrying everything down. All the moves to the downside were magnified, right? So where do we stand? Well, revenue growth of 13 per year, 55% EPS growth per year. And look, guys, the EPS is now positive on a recurring basis. Even the expectation is positive, and revenue just continues to ramp in a very nice fashion as well. About 13-15% per year. Where does this leave us in terms of valuation? $16. We're trading at a 61.5 forward PE ratio, but take a look at this EPS growth rate. When we divide this by this, we get a PEG ratio of 1.12. That is actually very fair for the company. And even their price to sales, when you take their market cap divided by their forward revenue in 2025, 5.81 for a growing tech company, guys, that is really not that bad. You see these tech companies trade all the time at 10 price to sales and 2 PEG ratios. So I think SoFi right now, the valuation is actually quite fair. Has it ran an absolute ton in the recent last 4 to 6 months? Absolutely. But could it be a decent proposition if you believe in the company and you believe in their capacity to ramp up their customer offerings and offer more of the Galileo product as well to other legacy banks? So gaining more enterprise clients and getting more personal clients at the same time? Well, I do believe that this one does have a very good chance of hitting the $20 mark at some point in 2025. And they have a good chance of just being able to expand the business overall in the next few years. So I like this one overall, and we are coming back into support. We'll take a look at the technicals a bit later, but I do like this one for a breakout, retest, and run, but might need to be a little bit patient, especially this week with Jerome Powell and other things considered. So that is everything for the DeepSeek and everything for the SoFi earnings. Hopefully you guys enjoyed that somewhat lengthy introduction, but when we have big days like today, I'll make the Monday videos a little bit longer. Now, in terms of the technical analysis, guys, I just want to preface the price action this week and say that anything can happen this week, guys. Why? Well, because we have very big volatility catalysts. We have Jerome Powell on the Wednesday session. We have core PCE and PCE inflation numbers on the Friday and GDP on the Thursday session. Definitely not a lack of macro catalysts. Now, the expectation for Jerome Powell is no interest rate cut whatsoever, but we know that a lot of emphasis is going to be put on his answers as pertaining to the projections of inflation, because we know what crashed the markets on December 18th in the last Fed meeting was the fact that the Fed raised interest rate projections for 2025 and even through 2026 a little bit, and decrease the amount of rate cuts that we may get this year. So this meeting is going to be a pause. That is what already is priced into the markets. Right? And overall, guys, we will have to listen to Jerome Powell's tone on Wednesday when he gets asked questions about the direction of inflation. That is going to be volatility catalyst number one. Volatility catalyst number two, of course, is the sheer amount of big tech names that we have reporting this week. ASML, Tesla, Meta, Microsoft, MasterCard, Visa, and Apple, to name just some of the biggest batches, some of the biggest companies of the bunch. Visa and MasterCard, arguably some of the biggest ones in financials. And of course, big tech, well, is big tech. So this week's price action, guys, is going to be a tale of respecting very large levels. Let me explain. We have a daily downtrend on SPY, big engulfing move, and we were always looking for the higher low. Matter of fact, I said Friday, now is a good time. I took a lot of profits off the table and was looking for the higher low and looking for some volatility entries over the course of this week. Lucky that they were provided to us early this week. However, you know, we can come down a little bit further. Let's say we have a little bit of a market bounce tomorrow. You know, just a little bit of the recapture from the capitulation today. There's no reason that Jerome Powell can't crush us and big tech as well. So we'll pay special attention to the levels, guys, right? It is a nice daily upswing, a lot of space for the bulls, anything above 575, looking for a daily higher low for further trend continuation. But if we plunge down lower high into lower low, Powell and tech earnings, understand who's in control here of the weekly. It was a weekly downtrend, big engulfing move, looking for the higher low. Anything still above 575, looking for the higher low for possible further trend continuation. This week is going to be very volatile. It's going to be almost impossible to predict where we end by the end of the week, guys. But just pay attention to the key levels. Big support down here, 585 to 580. We'll see how it reacts to it. There was a bunch of gaps to be filled. I am not surprised we filled a few of them, but there's one big one remaining down here. So we will see how the markets respond to the rest of the week. But all in all, the SPY holding up better than the Qs, of course, because of the rotation that we have. If this rotation does maintain, I do think the SPY stands to lose less than some of the technology counterparts, of course. Moving into the Qs right now, the Qs also down about 2.91% today. All in all, though, guys, yes, we did give back a huge chunk of the move. There was a few gaps to be filled, and largely, well, we didn't fill this one. We created another gap, but we did fill this gap largely, and this was the gap from the 14th to the 15th of January. So, sweeping daily downtrend, nice engulfing move. Now it's up to the bulls to set the higher lows and go for the daily trend change. But with all this move to the downside, we may just be looking for a lower high bounce Tuesday into Wednesday. If Powell and big tech are bad to us, you can see the daily downtrend, and then you can see possible further weekly consolidation, but we have to pay special attention to this zone down here. 500 down to 495, an area that we have not lost over the course of the month of January. So pay special attention. If we do come down here, how do we react to it? I would be highly surprised if this week is just going to be a straight flush down, but anything can happen, guys. The best we can do is hold our buying power and focus on who is in control of the long-term timeframes here. It is definitely your monthly bulls on the Qs looking for a higher low. And even on the weekly, guys, we have not rolled over the weekly engulfing move we have just placed. So we will take this one day at a time and go shopping for some of our favorite companies. I'm sorry that I cannot provide more guidance, guys. However, you know, with all these tech earnings and with Jerome Powell and other macro data, it's going to be a very big toss-up, but we're getting closer to the end of volatility than we are to the start. After this week and after next week, where we have Google and Amazon, guys, the pace slows down a lot. The volatility slows down a lot, and we embark on some possibly more favorable seasonality for February, March, April, and May. January is always a very volatile month, guys. So hopefully you are getting through this month with, you know, not too much damage, of course. Moving into financials right now. Well, financials, I mean, you never would have guessed if you looked at the Qs. Financials almost clipping into the new all-time highs. Very nice move on the daily here, never losing the daily upswing at all over the course of this move, as a matter of fact. So let me just put this on let me just make sure I have regular trading on. Yeah, perfect. All right, so the context was the sweeping daily downtrend. Nice engulfing move by the bulls. This is just one single big move. No daily higher lows have been set just yet. If we do start pulling back, though, guys, anything above 47, looking for a daily higher low for further trend continuation. Financials looking great, but some big ones reporting this week. MasterCard and Visa. Judging from American Express earnings, they should be doing quite fine. The consumer does appear healthy. Look at this weekly engulfing move. Beautiful weekly move. So even if we get a little bit of a recapture here of the daily downtrend by the bears, just looking on the weekly for a weekly higher low for further trend continuation. Where could we maybe come back into the 12 EMA, 49, and the below support region down here, roughly the same thing, 49 into the moving averages. So daily downtrend into weekly consolidation, just looking for the higher lows for a possible good start to the year of 2025. Moving into healthcare right now, healthcare up about 2.25 today, and they finally done it, guys. They have done it. Daily uptrend continuation right now. At this point, if we do pull back from here, looking for a higher low, anything above 139 will be for the higher low for further trend continuation. But keep an eye on the hourly bulls, guys, until you lose the higher highs and higher low patterns and lose this 12 EMA in a significant fashion with a loss of the pattern. Well, the move to the upside is not finished. And look on the weekly. Finally, we have an engulfing move. Weekly downtrend for so much time now, boom, 100% engulfing move. So even if the bulls give this back and daily downtrend and we start moving lower, look at this MACD, guys. MACD is now almost crossing any move on the weekly, looking for a higher low to possibly reset the uptrend. If this would look like this, my Picasso drawing would come alive, would be an inverse head and shoulders, and healthcare might just be out of the worst case scenario that we had over the last month. Healthcare is looking quite good, if I had to say so myself. There are several plays that I'd be interested in playing myself. NVO is one of them, but NVO has earnings next week, unfortunately. So we're going to have to put that one on the back burner. But if I see any juicy healthcare opportunities that I take myself, I definitely will be sharing that with you guys as well. Now, moving into semiconductors, the loss leaders of the day. Semiconductors, guys, 9.83% to the downside. I mean, I think this is one of the arguably almost the worst days in semiconductors. You'd probably have to go back to COVID to find such a destructive day like this in semis. But overall, guys, have we lost any major levels? No. And I was telling everybody to be very wary of the breakout. The fact that we did close a weekly candle above this, but I was not convinced. It was not a convincing breakout to the upside. It was a peak above, and then we just get smacked back down with DeepSeek. But have we lost any major levels that we haven't seen in the past 3-4 months? No, we just clipped into the 200-day moving average. We clipped into support 232 down to 219, and those levels stay the same. It's just we've now undone the daily uptrend, lost all the momentum, and we are short-term oversold on the hourly time frame. Look down here, my big head's in the way, sorry. We are down here crushed. We were crushed 15 RSI. So can we see a little bit of a bounce? Absolutely, but will it be a full V-shaped recovery bounce? Probably not. The bulls have to start everything from scratch. You need a nice engulfing move, reset into a daily uptrend. So we'll keep an eye on that if they can do it over the course of the next 1 to 2 weeks. I'm pretty sure, guys, they're not going to recover this in just 2 days. But over the next few weeks, can we mount together back a rally after the worry that was put in the markets today? Yeah, it would be a good chance, as a matter of fact. And we do still have good support down here, 232 down to 219. So once again, back into the gulag for SMH. And I will only be playing this only one way. I am only playing the highest quality and highest conviction companies in the sector for me. And I'll show you those trades at the end of the video. Key hint, it is the companies I've been talking about for the last 3, 4, 5 weeks. The only ones that I said I'd be playing: NVIDIA, TSM, and even a little shout out to ASML. Moving on further here, guys, IWM Russell down about 0.96%, even though the bonds were actually down today in a big way. I mean, the yields rather. 20-year yield pushing a daily downtrend, 10-year yield pushing a daily downtrend as well, looking very good. But the Russell did not respond well in tandem. Technology portion of that sector pulling it down. Still looking for the daily higher lows. At this point, anything above 214, looking for the daily higher lows for a possible continuation of the daily uptrend attempt and a break through the resistance line of 232 to 225. They really need to get above this, guys. It's a huge level from back in 2021. And until we get through that, I cannot say with confidence that we are really looking for all-time high expansion. A little bit too much uncertainty in the market right now for the Russell. But if we do somehow revisit the lows, 216 down to 208, the support range, I may be looking for a little bit of a cheeky bid on the risk on trade for this year. Moving on to Dow Jones right now. Very nice day for the Dow Jones, 0.65% to the upside. Started off red, but recovering green. And overall, guys, I mean, if you look at the regular trading hours, we'd never really lost the hourly time frame. It was a big move down, yes, but we recaptured it right away and protecting these lows overall. So this is still one sweeping daily move to the upside, daily downtrend into daily engulfing move. Looking great. A lot of space. Anything off the lows, anything above 41.9, looking for a daily higher low for possible further trend continuation. If we get a big retest and the markets fall apart, Powell, tech earnings, overall market weakness, daily downtrend, understand what's at play here. The larger time frames are at play for being recaptured. Weekly downtrend, big engulfing weekly move. You'd just be looking for a weekly higher low for a possible new weekly uptrend after having lost it in this segment back here. And that would be a retest likely 12 EMA on the weekly and this zone, which we've just described, which for all intents and purposes is down here, 43.3 to 43,000. So the Dow Jones looking very good. A lot of the portions of the value trade really holding up on their own. So fantastic little day for the Dow Jones. Other notable names up today, consumer defenses were doing good. Real estate was doing good as well. And all of that is off the back of a reduction in the yields today. Taking a look at the VIX actually spiked 20% today, but a lot higher, guys. The VIX was actually all the way up, 40, 50% today, and then retraced all of it. So it just goes to show you a little bit of temporary fears in the market, built up some very aggressive price action in the pre-market. And you can see as soon as the markets open, although prices of tech stocks continued declining, the VIX was moving down. Short-term volatility in a nutshell, guys. And in my opinion, that is possibly how it will stay. Can it stay sticky here as we move into Powell? And if Powell gives us a nasty surprise, or if big tech gives us a nasty surprise, can we maybe retest the low 20s? Quite possibly, guys. But in my opinion, all of this is short-term volatility and not lasting sticky volatility. That would be in relation with recessionary factors from the economy, right? We have to separate the two: short-term volatility catalysts versus long-term recessionary catalysts, and we do not have the latter form just yet. Yields actually moved down nicely on the day. We talked about that daily downtrend, and I drew this Picasso drawing as well over the last few weeks, right? And just appears as though it's playing out. Daily downtrend means we are officially into weekly consolidation. Now it's up to the bears. Well, the bears on yields, the bulls on bonds, because they're inverse, need to recapture as much of this move as possible. Give me an engulfing move, set up the weekly higher low, the lower highs, and then roll this over as well. Sometimes it takes a while to roll over these time frames, but eventually it can definitely happen. You just have to look back here where it took them a while, but finally they got it. The 20-year yields is arguably the same as well. Yields coming down over the course of the day today. 20-year. So if we do see the head and shoulders rollover on these, could be quite interesting, right? For a nice little retest down here on the weekly, and that will offer an opportunity to possibly even roll over the weekly timeframes, similar to exactly what happened back here where we rolled them over, coming off of heightened volatility and heightened uncertainty. And that will most likely carry into the bonds as well. Bonds with their first daily uptrend in a very long time, right? Nice new daily uptrend on TLT. And I was saying back here, guys, that TLT could be a very nice entry proposition, but you got to put a lot of time on these contracts. I'm a fan of the bond trade, but the one thing that this will undo this bond trade is any resurgence of inflation as caused by tariffs or overall consumer bullish or consumer overspending, right? If they get too confident, one of those two things will undo the bond trade. But if that does not materialize, then this could be a very nice entry for the bonds right now. Daily uptrend, the entry goes here on the break of the daily uptrend, and the stop loss can go below here. So the risk is very small, but where are we targeting? The take profit number 1 should be 91 and TP number 2 all the way up here at 94. But got to put a lot of time on this trade because it does move slow and it is very volatile. Moving into crypto right now. So Bitcoin reacting as it should from the support range. I will turn this line into a green box. My bad. If not, you guys will be confused. This is a support zone. And look, Bitcoin, the candle, look, it came down all the way into here with the volatility from the morning, all the way down in, and then just kind of worked its way out of it, right? People buying the dip down here, 101,000 to 98, and that support level does still stand right now. So even though the bears made a very decent attempt at trying to break to the downside, they did not get it. You can argue there is a daily downtrend in play here, and I would agree. That being said, we are above support. We'll see if it gets challenged. On the weekly though, guys, anything currently above 89.6, looking for a weekly higher low to possibly embark on the new weekly uptrend. But if we get caught in this range, guys, we're just going right back down to the range of support, 91 down to 89, and just going to tighten this up a little bit further. But as of now, very happy in seeing that the Bitcoin bulls are protecting this, and I took advantage of the very large dips this morning to buy them aggressively by writing short puts. Today was all a beautiful day, heightened volatility, heightened IV on respective options chains. I wrote some puts way below the markets, guys, and I can't wait to show you those at the end of the video. Ethereum largely trading the same. They reacted nicely from their support zone, 3,200 down to about 3,000, but still a little bit weaker than Bitcoin. We will see if they can protect this zone. If we kind of lose this zone, yes, it will be daily downtrend, and yes, we will be heading to lower to about 29 to 2,700, which should be an area of considerable pain for Ethereum, but is a nice area. Prior resistance should be support here as well, and arguably this area is probably more solid than this one. This one is more more recent, but this one has more price action as a whole. I do believe that if push comes to shove and Ethereum gets crushed, I think that is probably where we're going to find our last base of support for this one. But it all relies on the Bitcoin dominance chart. As I keep telling you guys, the altcoin rally will not start unless Ethereum starts participating and you start to see this Bitcoin dominance chart go down. As of right now, it is still a story all about and largely about Bitcoin. The altcoin rally, in my opinion, will only start when the biggest altcoin of them all, Ethereum, as measured by market cap, starts moving on its own. And so far, we have not seen that. Now, moving into big tech. Ooh, big tech, guys. This is going to be a tough one. Why? Well, because we have all the earnings, or for most of the earnings, right? So take a look. Once again, ASML, Tesla, Meta, Microsoft, and Apple coming up this week. So it's going to be very difficult to derive short-term price levels on Apple, but we will try our best. Apple up 3.18% today. Why was Apple up when everybody else was down? Is it because Apple already went through its sell-off and was daily oversold and we were looking for a bounce? Well, yes, but number two also because Apple, you got to figure that they are the ones that spend the least amount of money on their AI ventures so far, and they still have an absolute ton of cash to do whatever they please with it. So Apple, a little bit better insulated than the rest, spent less money on AI. So as a result, they get hit less hard by the overall narrative. Now, moving forward, take a look here at the Apple price action, and you will see Apple established a new daily uptrend. Very nice for them, guys. It was a beautiful daily downtrend for the bears. Now, new daily uptrend sequence. So what are we looking to do exactly for the bulls? Well, we're rejecting right now 237 down to 231 is resistance, and they do have earnings, but you can see very clearly where we're trapped between overhead resistance and below support, culminating in the 215. Now, Apple earnings for the week, guys, it's going to be tough to drive. We have Jerome Powell, we have the DeepSeek stuff. It's going to be very tough to drive. The best I can give you is the expected move, right? Take a look at the expected move is about 4% up or down for Apple. So let's say we start off for earnings on Apple. There's still a lot of time, 3 trading days left, and Jerome Powell will have an impact on this. 4% puts us all the way back up there. 4% to the downside puts us back deep in support. We are literally right in the middle right now, but nice to see the bulls coming live with a nice daily uptrend and nice to see them try to recapture a little bit of this weekly move. But let's be honest, there is a lot of work to do. You need to see a lot more substantial gains than this if you want to go for the V shape, or the more likely scenario is the breakout, retest, and 2-step recapture of the weekly uptrend. But earnings is going to be front and center for this company this week. And I'll remind you, the biggest thing you pay attention to for Apple, guys, revenue and iPhone sales. Can they get over their last slump of the last 6-7 quarters of having flat revenue? That is what we'll see together. Myself personally, I'm not going to play this company before earnings, guys. I'm going to wait to see, and if they give me really attractive levels, I will possibly play it down here, roughly close to 210, 205, 200 is where I actually want Apple, because they do trade a little bit high right now in light of that roughly flat revenue for the past few years. Moving on to AMD right now. Well, AMD not being spared, but funny enough, AMD was actually down one of the least in all the stocks this morning. Maybe because there's just nobody else to sell at this point on AMD, right? But that being said, unfortunately, the daily downtrend simply continues at this point. And, you know, the bulls had a very nice bounce, but a bounce only it was until you confirm a daily uptrend. I mean, ask the S&P, right? Ask the S&P or the Qs. Until you confirm a daily uptrend, a nice bounce is only a bounce. A nice bounce is only a bounce. A nice bounce without confirmation is only a bounce. You need that confirmation. I cannot stress it enough for the price action, guys. So now AMD, we are reacting very nicely from our below support 113 down to 97. But this begs the question, guys. I mean, AMD at this point now, NVIDIA is roughly trading at the same price. So at this point in time, if I'm going to commit $11,000 of capital to someone, it's probably going to have to be NVIDIA because they are the industry leader. But AMD can represent a decent secondary trade if you believe in the company thesis expansion, if you do agree with the valuation as well. Nice revenue and EPS ramp, very healthy valuation down here at 115. I'd have to redo this, but right now we're at a 1 peg for AMD, which is extremely, extremely soft in terms of valuation. When you figure that, yes, there's a lot of orders for their chips, and AMD put out a statement yesterday saying they already have DeepSeek integration, right? So very nice for them to do that. They obviously know the narrative right now, but EPS should be expanding well over the next few years, and revenue should be expanding well over the next few years as well. Not because people are going to use AMD chips for chatbots, guys. No, 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 no. They'll be using AMD chips as part of larger commercial applications for data processing, storage, and efficiency purposes, not to see who has the best the best chatbot out of all big tech, right? So AMD, the unfortunate decline still continues. Monthly downtrend, yes. Weekly downtrend, yes. But if you ask me my opinion, I think we're coming down into max pain for AMD. 112 down to 100, but I will not be playing this company this week. Why? Well, just because they have earnings next week. I do not want to be assigned and then have to run covered calls through earnings. I would rather just wait for Powell, wait for big tech this week, and then next week, depending on where AMD is, I may make a cheeky play for earnings. But in all reality, I would rather wait to see what earnings has in store for us, obtain some final price action levels, and then take some trades from there. I have one very small AMD leap call remaining on the position, but that is everything. I have not committed arguably any capital at all to this position. I've played the wheel on it a few times very successfully, made a decent amount of money on the wheel for AMD over the last 2-3 months roughly, which largely offsets some of the losses I have on my leap right now. But all in all, I still like this business. I think it's been unfairly hit over the last 3 months. Fair value for me is between 140 and 150. I'm not even saying it should be all the way up here, but fair value for the possible growth, about 140, 150, but they just have not been in favor recently. Moving into Amazon right now, Amazon, tremendous recovery by Amazon. Look at this move from Amazon, guys, from the early morning dip. Fantastic recovery, 226 to 235. 4% bottom to top. Fantastic day on Amazon, and they reacted beautifully from the levels. Daily higher lows are now set. So we know they had the daily downtrend, big engulfing move, looking for the higher low. For the trend continuation, they did it in one single candle. Higher lows are set right now. 226 is your higher lows, reacting very nicely from the support range and nicely from the EMAs. That support range is 230 down to 225. So not looking too bad at all, guys. Really, Amazon, fantastic. Have to tip my hat to them. They have earnings next Thursday. They will be affected off of the cloud growth metrics that are going to be put out by companies such as Meta and Microsoft, arguably maybe even IBM. For some of the cloud growth metrics. But overall, Amazon shaping up really nice. It's very hard to derive, how much they can run or how much they will be prevented from running much before their earnings. As I said, Powell and big tech this week largely stands to impact Amazon, but just keep an eye on a few key levels, right? Expansion, 240, 250 psychological. I'd be highly surprised if you see Amazon do this before earnings, but anything is possible, of course. To the downside, you want to see them continuously respect 229 to 225. If we just a little bit of weakness in a Powell and stuff like that, and we hold up these levels, I think they're going to be sitting pretty into earnings. And overall, guys, still a very healthy weekly uptrend in motion. So nothing bad to say about the bulls. Tons of space, guys. Anything above 216, looking for a weekly higher low for possible trend continuation. But as I said, the company is beholden to earnings, and I will give you my predictions as to price as we move closer to their earnings. Or even after Powell, which is going to be later this week and early next week as well. Moving on to Google. So Google getting hit 4% to the downside. I mean, arguably, the Gemini product is a direct competitor to DeepSeek. That's why it was hit a bit to the downside, guys. But I mean, Google. Think of all the money Google is spending on data centers, guys. But think of all the data that Google has. Google Workspace, right? The Google Sheets, Google Work, tons of different things, right? Google's version of documents, their version of PowerPoint, all of that stuff that gets stored in the cloud, Gmail, YouTube. Can you imagine the amount of storage that you need to constantly upload millions of videos from content creators and host them on super fast servers so the playback speeds are fast? So many different things. Think of all the servers they need for the Waymo division, the self-driving cars, right? So as you see, Gemini, the AI chatbot and AI application for Google, is not the reason Google is spending $100 billion on data centers, guys. They have so much data that they have to process, store, and optimize, right? So it goes well beyond. So the 4% decline, sure, I'll take it, guys. But overall, is Google's business model affected in the long term by DeepSeek? Not even close, in my opinion, guys. If anything, could be a decent buying opportunity. They have earnings next Tuesday, so not that many days, but we are coming into support here, guys. Previous all-time highs and the baseline of support down here that we've been forming since the late stages of December, talking about 191 to 187. We will see how we react to this. Still a daily uptrend, looking for a higher low. Anything at this point above 188. But at this point, guys, it's a very, very wide range, right? You can see it's a just very choppy range. And I do think Google will probably stay choppy until their earnings. We'll see what happens. But if I can find Google back into the mid to low 180s, either before earnings or after their earnings, I'm going to be bidding the heck out of Google because of how cheap they trade right now. At the mid 190s, you're talking about a 1.43 peg. So very, very nice valuation for Google. And if they do come down here, for me, guys, it's going to be short puts all day, 185 to 175. Moving on to Meta right now. Meta recovering beautifully intraday as well. Take a look at this, guys. Bottom to top on Meta, 5.33%. And same thing for Meta, guys. Do you think that DeepSeek is going to affect Meta's business models? Not really. Well, maybe their Llama 4 in terms of a very concrete application of Llama 4, which is chatbot purposes. But Llama 4, guys, goes well beyond the chatbot applications. And also think of all the data that Meta has to deal with from Instagram, from Facebook, from all the different ad campaigns and ad optimizations. That ad algorithm is arguably, with TikTok, two of the best advertising algorithms in the entire game right now. And that costs billions and billions of dollars to run efficiently to derive trends and make a better experience, not only for you, the consumer, but also for the advertisers who pay for ads on the platform. So Meta has a tremendous amount of use case for the billions of dollars, hundreds of billions of dollars that they're committing to their data center ramp out, which will be future-proofing the company for the next 5 to 10 years. That being said, Meta with some great expansion today, nice daily uptrend, and they do, as a matter of fact, have earnings on the Wednesday session, creating a ton of space off the lows here, 589. So I'll remind you, the expected move for Meta this week, well, I'll not remind you because it's the first time I'm telling you, but the expected move for Meta this week is going to be, oops, something went wrong because I typed it wrong in the chat box. That's how you know these videos are not edited. I give you guys comic relief. You can laugh at my misuse of a keyboard. Now, moving on here, 6.37%. So 6.37%, if they start from here, if Jerome Powell doesn't crush us or tomorrow doesn't crush us, if they start from here into earnings, you can see they have a very nice cushion now, 11% to the most recent support area, which would be 590 down about 580. If we retest here, decent buying opportunity, but if earnings absolutely crushes it, I think Meta is heading all the way up to about $700, guys. Fantastic maintaining of the daily uptrend, fantastic expansion of the weekly uptrend as well. Nothing bad to say. The bulls are in full control of this chart, and they have created enough space now off of these lows to be insulated from any, awkward interpretation of their earnings from Wall Street, which could send them down 7 to 10% into the most recent area of support. So Meta arguably has one of the best setups in terms of space between them and a support level of arguably any big tech. Moving on to Microsoft right now, 2.14% to the downside, but even Microsoft. Look, guys, at one point, Microsoft was down 4.5%. From the bottom to the top now, 2.5%. Microsoft as well, guys. Do you think that DeepSeek is going to kill Microsoft's business? Come on, guys, let's be real here. Microsoft is an octopus. They have arms in every single portion of any business that is imaginable to humankind. They have the whole Microsoft operating system. They have the Office operating system and all the data that goes into that as well. They also have a number of different things, from the Xbox applications to their acquisition of Activision Blizzard and all the server power required to run the Activision gaming division of their business as well. Microsoft has so many different applications, from personal client to enterprise solutions. They need a ton of processing power, guys. They power the back end of so many companies in the world. So many companies in the world use Microsoft operating systems to operate their businesses, both commercial, enterprise, and client solutions based. So obviously they do need to future-proof their business to the tune of hundreds of billions of dollars of new data center installations to once again collect, store, and optimize all the data that they get from different clients, from enterprise solutions, make sense of that data, optimize it, and provide better products to clients in the near-term future. That is the competitive advantage of Microsoft. They are, for all intents and purposes, at what they do, a semi-monopoly, and they have a very wide moat. A company from China, such as DeepSeek, is not going to be able to replicate Microsoft's business model and develop the new operating system that the entire world is going to utilize. That is pushing the boundaries a little bit more. But are they getting a little bit of run for their money in terms of their Microsoft Copilot AI? Sure, but will they be able to use advancements from DeepSeek, and will the industry go back and forth, new technological advancements, and will everybody win from this? Absolutely. And the biggest winner, guys, I'll remind you, the biggest winner of all of this is you. Maybe not your portfolios temporarily right now, but think of all the nice and cool stuff that you're going to get built in to laptops, built into PCs, built into iPads, built into phones over the next 5 to 10 years. It's going to be very cool. So think of the upsides as well, right? Not only the negativity from stock prices today. Microsoft down about 2.14%. So that being said, daily downtrend leading into a new daily uptrend here, but oops, you lost the lows. So this is very, very, very choppy price action, and we will have the final result on the Wednesday session when they have their earnings, guys. The expected move for Microsoft, I will show you right away. The expected move for Microsoft should be about 4% up or down. It usually is, and as we see here, it's about 3.76%, on this chart, 3.76% right there. So to the upside, guys, that would put Microsoft where? Well, at the highs that they've recently been, 450s, and to the downside, where would put them? Well, arguably 415, 410, an area that they have been trading around largely in the past year of trading. Do I think Microsoft's going to have a terrible quarter? No. Are they probably going to have a very good quarter? Yes. Microsoft usually does beat on the expectations, but there's going to be a focus on capital expenditures. If we do, I don't know which way. If you had to ask me, my best guess, 60-40, I'm leaning for the bull break. But if we don't get it, guys, will I mind once again playing Microsoft down here with some short puts, either with MSFT or MSFU, which is a cheaper way to play Microsoft? Am I going to mind playing the wheel on Microsoft? No, I would love buying more Microsoft down here in this big range of accumulation. So Microsoft holding level right now, holding support 433 to 424. We will see if the bulls can push a little bit more, create some more space before those earnings. But all in all, even though they're down 2.14, they held up pretty well. Another company that held up very well today is Netflix, only down 0.58%. Netflix doesn't really care about AI. Sure, they need a lot of servers, right? And a lot of GPUs to possibly process the data that's coming through their servers. But there's numbers of different ways of creating servers. You can create them with CPU racks. You can create them with GPU racks. All to say that Netflix doesn't really have any skin in the game in terms of AI. Can they use AI to maybe optimize the advertising efficiency from the advertisers to the end client? Sure, but all in all, it's not as if they're spending a tremendous amount of money on AI that they don't really need in the future. They're modernizing their applications and building out infrastructure to be able to host live sporting events and other things of the nature, right? Largely unaffected. Daily upswing is very nice. If we do pull back a little bit more, tons of space, guys. Anything above 826, looking for a daily higher low for further trend continuation. Down here, 930 down to 900 is the support test. So we will see if we get that over the course of the Jerome Powell session, or maybe with big tech earnings. But I mean, who's in control here, guys? The weekly bulls are clearly in control. Even on the weekly, guys, if we pull back this on the daily downtrend into this level, look how much space we have. Anything above 830. Looking for a weekly higher low for further trend continuation. So Netflix holding up very, very well today, all things considered. And now NVIDIA. Give me a brief moment. NVIDIA, down 17%. The NVIDIA killer. Oh no, all this money spent on GPUs means that NVIDIA's GPUs are now worthless. Absolutely worthless. If DeepSeek was able to utilize older versions of the GPUs, well, then why is anybody using the new versions, of course, right? That's kind of not how it works, guys. It's a very layman's argument, right? A very surface level argument for NVIDIA stock as a whole. Now, NVIDIA is pushing the boundaries of a few different things, but to keep things very simple, the main competitive advantage of NVIDIA is their CUDA library or the CUDA network, right? To make all of these large language models work, what you need back-end software. NVIDIA's is arguably the best in the game. So yes, not only do they make the best hardware in the game, but the software that you plug your software into to then be read and optimized by the NVIDIA cards, that is going through what's called the CUDA network, CUDA. CUDA, NVIDIA. Just Google this and you'll know everything that I mean, right? So this is how you train the cards in terms of efficiency, power use, a number. You can tweak arguably almost everything, right? That is NVIDIA's competitive advantage. So no, I do not think this will kill it. And as you guys know, right? So you can buy a 10-year-old NVIDIA GPU to run an older version of Diablo, let's say, and it won't perform too poorly. But everybody wants the best cards nowadays to run the best technology nowadays, and that is never going to change, guys. Nobody's going to stop buying new NVIDIA GPUs just because of the DeepSeek breakthrough that just happened. If anything, as NVIDIA said, you will require more and more NVIDIA GPUs now, because now DeepSeek has proved it's possible to build these things for fractions of the cost. So you'll have a bunch of new players trying to build their own chatbots. But chatbots, they will remain. They will not be pushing the boundaries of compute power and raw power from these data centers that the hyperscalers own. For that, you need the best and the biggest chips in the game right now. Are NVIDIA chips overpriced because of increase in supply or an increase in demand? Yes, you can argue that they're overpriced. But they are the best in the game. They're the best in the game for a reason, guys, because they will be future-proof at least for the next 2-3 years, or whenever the duration of a traditional GPU refresh cycle is. And big tech, guys, they won't stop there. They will refresh these every few years. They need to stay top of the game and have the most available compute power for all of that data. So NVIDIA, guys, is not going anywhere right now. As a matter of fact, the valuation just got a whole lot more attractive. NVIDIA came down to levels that we haven't seen for a while. This is the first touch and break below the 200 daily moving average since back before nobody even cared about NVIDIA's data centers. Since the old AI rally started, that is the first break of the 200 EMA. The weekly, first test of the weekly 50 EMA since, once again, nobody was even looking at NVIDIA for these data center units, right? So a lot of very big tests, and now that means NVIDIA is down roughly 25% off the all-time highs. Well, let's go back in history. Is it a good time to buy NVIDIA in the context of a bull market when it's down 25%? Can it go down more? You can see this pullback here, June to August. Do you guys remember why this was the case? It wasn't a question of whether or not big tech was spending too much money. This was an overall rotation from tech to value from the scare that we got from the Japanese carry trade, the end of it, right? This was a 34% sell-off. What about this one right here, end of August into early September? Do you guys remember why this one happened? Probably not. That was a 22% sell-off, though. Do you guys remember why this one happened in March into April? Maybe not, but I'll remind you, it was inflation concerns for the US economy. And then we have last fall, 2023 as well, where we saw the stock decline multiple times in the 20% range. NVIDIA does this more times than not. It's just when you do it in one clean candle, it kind of looks a little bit weird, doesn't it? That being said, hourly oversold conditions are absolutely crushed right now. I would not be surprised if we do get a short-term bounce on NVIDIA, because we were reacting from my second level of support. I said I was willing to bid this one. It didn't even give me a chance. It blasted through. So when we hit the second level, guys, 120 down to 115, I was bidding, but I was bidding very cheap, and I'll show you that trade in just a few short moments. So nicely reacting from the 200, from the support level. We will see if we get a bounce, but I'll remind you, now that we've lost a big major level, we are now nowhere close to the all-time highs. Daily downtrend, the bulls have to start everything from scratch. You need a nice daily bounce and then a nice recapture of the daily uptrend. It all starts with recapturing these guys here, 125 to 140. 125 to 130 to the downside. Where could you expect? Well, the next stop arguably is down here, 105 to 100. That would be max pain for NVIDIA, in my humble opinion. And that would be a drop top to bottom, guys, of 35 all the way down to about 38% if you go all the way to, $198 type of thing. So that is what we're expecting for NVIDIA. I do think it's a buying opportunity, but we need to see this level out. Weekly downtrend as well, guys, is in play right now. Clear weekly downtrend right now, which just leads us into further monthly consolidation. Look at this monthly time frame. I don't see anything wrong here. We're just kind of testing the 12 EMA, which would be a test of the 110 level down there. And, overall, we were monthly overbought, guys, for like a year at this point. And now in one single day, we have cooled down an entire monthly chart. Not looking too bad, much more manageable level. I would not be surprised if we do end weak into January, maybe a little bit of a tail in February, set some monthly higher lows, and then when everybody gets back to their senses, NVIDIA will probably see some share price appreciation this year. Of that, I am fairly positive on, and I'm putting my money behind it as well. Can we see some further downside? Yes, but it is a buying opportunity, so do it slowly, guys. A little bit here, a little bit there, a little bit there if you're building a longer term position on NVIDIA. For call options, it may be tough to time, guys, but put a lot of time on the contracts. And DCA, it's going to be your best friend. Moving into Tesla right now, gotta accelerate here because running out of time. I want to keep this under an hour and 20 minutes. Big day today, guys. an exception day. I'll go deeper today, but if today didn't happen, this would have been a 40-minute video. I'll do the longer videos Monday and Friday, but Tuesday, Wednesday, Thursday, other than earnings days, we're going to keep these as quick as possible. But today, I'll give you guys a little bit extra because I know maybe you need it. So Tesla, daily uptrend into some consolidation for Tesla. Tesla was down at one point almost 4%, and they're losing more and more ground, right? 377. The expected move for Tesla earnings is quite large this week, and all things considered. It's about 9%, 8% last time I checked. You can see it right down here, 7.5% as a matter of fact. So let's call it 8% to the downside. Where does that put us from here? That would put us right down into the 360 range of prior support, 350 to 330. And to the upside, well, it would put us right back to where we were a few short weeks ago, around the 430 mark. Very tough to derive, guys. Earnings is going to be the end-all be-all for Tesla. I'll do a preview Tuesday before the close, but I would be very surprised if Tesla loses this big level before earnings. And I would also be equally surprised if we break above this much before earnings too. I think we will largely maintain this range of price action, which for all intents and purposes is the support 410 down to about 375. The weekly levels, previous all-time highs, current support. We'll see what happens. I'll give you more of an earnings preview come Tuesday. Suffice to say, I'm not positioned. I have one tiny position that I started today at the drawdown, max drawdown of the day. I'll show you that, but you'll see it's very small. For the most part, I'm going to wait until we're closer to earnings for this one, but not looking too bad in terms of Palantir as well. Palantir at one point today was down over 6.5% before recovering nicely in the intraday period. I'll remind you what Palantir is trying to do. Daily downtrend, nice engulfing move to the upside. Now they need to set the daily higher lows for further trend continuation. Palantir is not really affected by DeepSeek. They're not building a chat model. Palantir is building a one solution fits all for AI pretty much, and just going into different companies and making sense of their data. If I had to describe Palantir in one sentence, it's pretty much allowing companies to make sense of their data and process it in a very easy for programmers, developers, and then even management to read and interpret. That is Palantir's offering in a nutshell. Yes, they do a lot for military security purposes, government purposes as well, but on the commercial side, they're just looking to make sense of big data for corporations so that management can make better decisions as to which direction that they want to improve in their business, right? So Palantir, not so much affected by DeepSeek. That being said, looking for the higher lows, reacting nicely from support 72 down to about $70. Palantir has earnings as well next week, so maybe a little bit muted. We'll move with the volatility of Powell and the rest of big tech, but might just be a little bit muted. I'm not expecting flushes of the lows this week for Palantir, but we're also maybe not expecting new all-time highs for Palantir. May just stay range bound in this general location, 79 to about 69. We'll take a closer look at this as we move closer to earnings or when we move through more volatility catalysts. But Palantir, overall, holding up nicely. The weekly bulls still looking to just protect this weekly uptrend, maybe into somewhat of a tightening range, right? And now lastly, SOFI. SOFI, we covered it early on in the video, but suffice to say, guys, weekly downtrend, big weekly engulfing move. Now it's up to the bulls to set up the weekly higher lows for further trend continuation. Anything above 1350 on the weekly, looking for the higher low for further trend. Nice thing though, a lot of support here. 16 down to about $14 is support. So the bulls have a lot of wiggle room for themselves, right? The daily is still technically a nice daily engulfing move and a lot of space off the lows as well. That same 1360 level is going to be a baseline. So SOFI might hesitate a little bit over the course of the week. A lot of volatility catalysts, guys. But the best case that SOFI can do is establish this level as a very strong shelf of support. And eventually when the market permits, then it can maybe embark on the continuation of the monthly uptrend, but it might just be a little bit choppy here for SOFI. So the best friend for choppy markets is going to be me looking for short puts at the bottom end of support, which is roughly 14 down to about $13. Would not mind buying more SOFI shares. And I do still have the call options that I bought before earnings here. I bought very small because I know it was not the best location. It was a lottery gamble for SOFI earnings. I took the risk. We got burned a little bit on a very small amount of capital, guys, but I will still be holding those calls because we have till September, and I am very bullish on the direction of SOFI for this year. Now, let's get into the portfolio, shall we? All right, so moving into the portfolio, guys, you can see we are down a cool 1.6K today, which is roughly 3.5%, which is roughly in line with the declines of the QQQ. So today we performed almost on par with the Qs, going down a little bit more because of our call exposure as well. But all in all, guys, You remember I had about 94,000 in buying power. I did deploy some, but not even close to all. I'm being very patient for Powell, very patient for tech earnings as well. Let me walk you through a few of the new positions because a lot of these we did cover in the Friday session. So I'll just be going over the new positions overall that we had over the course of the day today. Bitcoin, very early in the day, you can see that I was able to fire off a trade here for one short put at $48 strike. Now, BITX is holding up a lot of the volatility, but $48, guys, from where we currently stand is quite a drop. That would be 19% to the downside, or a 9% drop on Bitcoin. Where would that put us? Right down to where we want it and the lower 90K. I will be looking to buy the dip, but if this one expires by the Friday session above, I'll just get to collect my over 0.5%, and that is pretty much that. So we benefited from the Bitcoin drop today. The same thing we did on Ethereum. Ethereum as well. We fired off the $5 puts on the 2x leverage product of ETH, and we got 30 cents for them. That is a very, very juicy proposition, guys. These are for February 21st, arguably 3 weeks in the future. So the math is as follows. You do 0.30 divided by 5, that is your ROI. 6% divided by 3 weeks, that is 2% per week. I will take that. Why? Because that is exactly in the location I want to buy ETH. $5 on ETHU, that is the section on Ethereum I was referencing, the 27 to 2600 range. I am a buyer of Ethereum down there, but you see I went very small in case I need to DCA into it. Only 2 contracts, $1,000 of notional value, but we did get very highly compensated for it in terms of ROI. Moving on to other trades that I made today, NVIDIA. I did not even get the best level of the day. I went into this one very early this morning when NVIDIA was down 12% after the open. I was into this trade right about here, and then we kind of slid all throughout the rest of the day. I did not get the best pricing at all, but I am very happy with the pricing I got. I went with the 105 strike all the way down there, guys. 105, a tremendous amount of wiggle room on this price as a whole. We went for the February 14th, roughly about 2.5 weeks into the future. 105 puts for $123. It is a very conservative option. I'm willing to be assigned NVIDIA at 105. And if you listen to my top 5 options video, guys, I always tell you guys to be dynamic with your strikes. I gave the expected move yesterday. It was about 137. Obviously, when it opens down here, you want to go as low as possible. So you have to use a little bit of logic behind this, and low as possible for me meant the 105s. Now, I did not get the best price. You can see we're roughly down almost 2x on these contracts. So I could have been a little bit more patient, but I only did one contract in case the stock moves lower. I will DCA with lower strikes, but at a first glance, I am very happy with receiving over 1% in premium for 2.5 weeks. If NVIDIA has a little bit, even a little bit of a bounce from here, the premium should pull out of these contracts quite nicely. So we'll keep an eye on how this evolves. But this is my first slight buy the dip attempt on NVIDIA, all the way down there at 105. And now moving on further, SMCI, $20 contract, guys, for next Friday. 2 weeks, and we got roughly 1%, 0.5% per week. I'm very happy, even though we didn't get the low of the day. SMCI was fired off early as well. Look how much space I have on SMCI, guys. This is such a joke of a trade. Look all the way down here to $20, guys. 31% lower by next Friday. They have earnings next week, of course. I'm giving myself all of that wiggle room, and if I get assigned 100 shares of SMCI at $20, the valuation is going to be extremely disgustingly cheap, right? At $24 we did the valuation, it was a 0.21 peg. You can imagine what it's going to be 20% lower than that. It's going to be like a 0.16 peg, which is crazy. You almost never see that in the market. Price to sales will be crushed. I'm a buyer of SMCI down here at $20, but only 100 shares. So I gave myself a very large amount of wiggle room, 30+% to the downside, guys. So we'll see how that one plays out. And last but not least, TSLL, 2x leverage on Tesla, 16 puts we went for February the 14th. Once again, another 2.5 week contract. You'll notice I'm putting a lot of time on these contracts. Why? Today was a very volatile event. I'm looking to play oversold levels. If we get bounces from these levels, Powell is good, big tech earnings are good. All these contracts will pull a lot of the premium out of them in a very fast manner, and we can probably close these by the end of the week. But in the event that things get worse, I gave myself a tremendous amount of time and a tremendous amount of wiggle room. Look at the TSLLs, 16 short puts to the downside. Where is that on Tesla? That would be a downside on Tesla of roughly, well, TSLL, all the way down here at 16, that would be a downside of 38%. That means that Tesla has to go down half of that. That is roughly 18, 19%, meaning that if I get assigned there, I would be getting assigned Tesla almost 20% lower, 18, 19, 325, 320. That is where I do not mind playing a little bit of Tesla, but you can see how heavy I went. One contract. Why? Because of Powell, because of Tesla earnings and other big tech earnings as well. If I have the DCA at lower strikes, I've left myself a large amount of buying power. This is a first order, 16 short puts, 20 cents. So I collected just over about, let's call it 1.5% for the next 2.5 weeks. I'm very happy with this first foray into the Tesla trade, but you can see across all of these guys, I went very small and very light, going into the market progressively, but I know Powell and tech earnings are another big catalyst, so I'm not even spending close to a lot of buying power just yet. And the last one is a longer duration put. This is TSMC, February 28th, so 1 month of time, 4 weeks, 170 short puts, which is 10% lower than right now. We got 330 for them, 2% for a month, roughly 0.5% per week, right? So 2% total for the month, and TSMC is down at a level that I want to buy them at 170. One contract only. Where is that on TSMC? 50 weekly moving average. It is the monthly 12 EMA and would be a very welcome retest, a monthly higher low for further trend continuation, because yes, I think TSMC is very nicely valued right now at 215, guys. They were a 1.25 peg. If I were to redo this valuation at 170, you can imagine how cheap they would be. Well, we can do the math together. 170 divided by 215. That's 0.79. Do the peg times 0.179. That would be literally under a 1 peg for TSM. I'm going to buy TSMC if they're down there, guys. People are going to need TSMC chips for the next 5, 10, 15, 20 years. That's not going away. They're the industry leader. They're the technology leader as well. If they don't need them for data center applications, although they will need them for data center applications, they'll need them for everything else: cars, cell phones, computers, laptops, and everything in between. The company is not going anywhere. So myself personally, I do not mind buying TSMC at 170 with $3-something in credit. Gives me a break even of 167. Very attractive buying location. You would have to go back all the way to arguably June and July to get those same levels. So I am a buyer down here. We will see what happens with that trade over the next 1 month, but that is my trade on TSMC. Nice little wiggle room cushion here of about 12% over the next 1 month of trade. They do not have earnings. They just had their earnings. Only big tech stands in the way of this one. So we'll see what happens, but I'm a very happy buyer of TSMC at some of the historic levels that I always look for this company at in the context of bull markets. Usually buying, this is the bear market, but usually when you find TSMC at tests of the 50 EMA on the weeklies, in the context of a bull market, it can be a very nice proposition. Even in the context of a retest of the monthly 12s, it can be a very nice opportunity for a little bit of lift off of some local lows, right? So that's what I'm basing the analysis off of, and the fact that down there, the valuation would be a 1 peg. So in my opinion, very no-brainer bid, at least for one contract with the size of my account. So that is all the trades for today, guys. Hopefully that is educational. Hopefully I captured the essence of what happened today by explaining the DeepSeek situation and how it relates to all of big tech individually in terms of the price action and which companies and which sectors stand to be more affected than others. That is it for today's video. Sorry for the long one, but it had to be done because everybody must be wondering. So hopefully I covered all the bases. If you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We'd love to have you back here. We hit 5,000 subscribers this weekend, guys. Thank you so much to each and every one of you who spent the time to watch the videos, to like, to comment, to subscribe. You guys make the journey all that much worthwhile. And lastly, if you have any questions, of course, feel free to ask them down below in the description about anything that happened today or my opinion on the matter if it was not clear in today's video. And as a whole, guys, if you want access to all of these trades in real time when I take them, well, the link to the Discord is always down below. Here are all the trades from the inception of the Discord. We do a lot of different strategies: the call options, the leap call options, swing trades for shares, short puts under the market such as today, call debit spreads, call credit spreads as well. I didn't even show you guys, my bad. I opened some call debit spreads as well. ASML, call debit spreads here. May 700 versus 710, looking for recovery rally. 416 got the lows of the day. And also, guys, forgot to tell you, NVIDIA call debit spreads as well. 120, 125, 220 for May. Very, very, very small, guys. Very small, and we're targeting the upside recovery by the month of May. So I did buy some call options, but the safer version, which is call debit spreads. If you want access to all of those trades and all of those strategies, the link is down below. We also do private morning live streams where I can appease your fears every morning, Monday through Friday, for about 2 hours. We did a 3-hour live stream this morning, guys, live trades, and answering everybody's questions and concerns. So if that's something that interests you, the link is always down below. You can also chat with me all day, ask me my opinions on your stocks, your options. The live streams are recorded in the event that you miss them. I also share all of my watch lists, all the technical analysis, the indicators, the support, the resistance levels that you see on the charts, all of these annotations. I share those in the Discord, so you don't have to do any of the work. You can let me do the work and just benefit from all my charts, and also the private videos, which helped a lot of members today managing their stress. High conviction trade setup analysis, as well, and many, many, many more things, right? So psychology videos, high level strategies for markets such as these, and they've been helping a tremendous amount of members over the last, months that we've had the Discord in place. If any of that interests you, the link is always down below. And if not, I guess I'll see you back on the channel, guys. That's it for me. Take care, rest, relax tonight. We have more volatility throughout the week, so don't burn yourself out right away, right? Wait till Wednesday or Thursday to possibly pull the remainder of your hair out, so to speak, right? So take care, guys. Take it with a smile. Take some weight off your shoulders. It's going to be okay. And that is pretty much everything I had for you guys. So take care. I'm off. See you tomorrow, and peace.